All right. Hey, everybody. We are live. This is Palm Beaches Paul, your local realtor and guide to South Florida living. And welcome back to another one of my live streams. I know it's been a while since I've done one of these, but I've been busy making videos and trying to sell real estate and just enjoying living here in South Florida. So today we are going to be talking about as I hit the mute over here on my other monitor, we're going to be talking about the condo crisis. You know that I made that video back in December, and you've been paying attention to a lot of the news that's been going on. It's just progressively, gotten worse. Again, depending on what type of condo you live in. You live in a new condo, maybe not so much, but the insurance, prices and the premiums and the HOA fees are still going up for pretty much everybody. So what we're going to do today is I have a special guest, and we're going to get to him in just a minute. But I wanted to do a live stream. I want to start bringing guests back on, trying to bring people in that can add value for you guys about everything that's going on here in South Florida. And so I'm looking for different people that I can bring on who are experts in their field. This gentleman is very much that. And so we will talk to you about different things that are going on, maybe a mortgage expert, sometimes it may be a lawyer like I've had in the past. So we're going to be trying to bring those type of people in. But before we get to that, I just wanted to kind of go over, say first, thank you guys for hopping in. I appreciate it. And, you will be able to ask some questions later on as we get onto this. But wanted to talk to you guys, just a couple updates in the local news. I'm always trying to keep you guys up to date with some of the stuff that maybe I can't put in one of my videos. And so wanted to talk to you about some of the things that have popped in my news feed in just the past day. One is that in the South Florida market, we're starting to definitely see sort of a change in the market from where it was a strong seller's market. It's starting to level the playing field a little bit, which I know a lot of you are looking to move down here. That's what you've been hoping for. The interest rates, mortgage rates did go down slightly, but I know that you guys have been waiting to see when it's going to be more of a buyer's market. And it's not quite there yet, but it is at about 4.4 months of inventory right here in Palm Beach County. So that means, that it's definitely going up from when it was like 1.2 months of inventory. We're now at 4.4. And obviously if it starts getting closer to 5 or 6, that gets more into a equal market, more like a buyer's market where there's enough homes out there. So, and the MLS report says that the monthly supply of inventory has increased year over year in Palm Beach County. In Port St. Lucie, it's about 4.4. There's also an explosion of new construction. There's a lot of new construction going on all across South Florida. And yeah, that's one of the reports I was reading today. I was just trying to look at some of my notes about it. Even after all the videos that I've made lately about hurricanes and the crisis, people are still moving to Florida, folks. There's still a ton of people who want to move here. The report that they have expected gain of people moving to Florida is going to be somewhere between 225 and 275,000 people in 2024. So for all you who don't want more people moving to Florida, I'm sorry, because they're coming. They're still coming to Florida. So, and it is getting a little bit crowded here. But so that's one of the reports. Another one that I think if you're looking here in Florida, and if you live here in Florida, you have a job here in Florida, I know a lot of you watching are out of state, but those who might be in here, the Hometown Heroes Housing Program starts taking applications, I believe, July 1st. That's a great program. And basically, it's available to full-time workforce who are employed by a Florida-based employer. And you can receive lower than market interest rates on FHA, VA, Fannie Mae, or Freddie Mac first mortgage, reduced upfront fees, no origination points or discount points, and down payment and closing cost assistance. So basically, the borrowers can receive up to 5% of the first mortgage loan amount, not to exceed $35,000. So, and basically, what they do is they add this like a second mortgage that they pay off at 0%. So it's a great way for those looking to get their first time home. And you can be a first time home buyer if you haven't owned a home in 3 years. So you can take a look at this program. But this program, they just added $100 million to it here in the state of Florida. It goes real quick. And so you got to obviously qualify for it. Talk to your mortgage lender. If you don't know one, reach out to me. I'll put you in touch with one. But it's a great program, but the money goes super quick. And I remember last year I was trying to talk to people about it, and then next thing you knew, they were out of money. So, so if you want more information about that, reach out to me, and be happy to get you in touch. And then speaking of condos, just report Mercedes-Benz added its name to the luxury condo market project in Miami. And JDS Development is scheduled to complete the Mercedes-Benz Plaza in 2028 with 791 units rising 60 stories, with studios starting at $550,000 and 3-bedroom homes for $4 million. So if you want to move in one of those, reach out to me. We'll head down to Miami, get a Cuban coffee, take a look at the beautiful skyline. So, all right. So those are some of the reports. Just want to get you guys updated. Looks like we've got quite a few people joining. That's great. So it's a perfect time to go to my notes and introduce our guest. So take a sip of water for a minute. All right, guys. So our guest today is Doug Deerdorf. And Doug is a licensed insurance agent who specializes in community association master policy programs. He's a managing risk advisor with the Baldwin Group, and he oversees the Florida Community Association practice group at the Baldwin Group. Doug and his team insure over 500 associations in Florida, consisting of condos, HOAs, townhome, and co-op communities. His writings have been published in local and national industry publications. He's a guest speaker and a Florida certified continuing education instructor for community association managers. He's been married for 28 years, has 1 child at home and 2 adult children. And let's bring in our guest, Doug. Welcome, Doug.
Hey, Paul. Thanks for having me.
That's sure thing, man. From the other side of Florida, right? Just across Alligator Alley.
That's right. Yeah, we're up here in the Sarasota, Bradenton area, Manatee, Sarasota County, and lived in this area for 20 plus years. So
beautiful, beautiful. Well, thanks for coming on. So, Doug, I think you saw me a couple months ago when I did my condo crisis video, and you'd reached out to me, and I appreciate that. Me being a realtor, I made a video about what I was seeing. Just started hearing about assessments, and of course, after the collapse, that a lot changed with that. And we started to hear all the rumblings, and hey, these new laws are going to go into effect, and by the end of December of this year, people are going to have inspections done, and I know we'll get into all that a little bit. And so Doug and I had been talking back and forth, and I knew that you would be a good guest to come on because the video went viral. It's sitting at like 1.6 million views, all sorts of comments on it, and people are concerned. People want to know, well, how does it affect me? What condos does it affect? What is a milestone inspection? When do they have to have it? I'm sure you get all these questions, and I've been getting a lot of questions. So I thought it'd be good to bring in you to kind of answer the questions and talk a little bit about what's going on in the state of Florida from the perspective of someone who writes the policies, and maybe to answer some questions. And I know we got a list of some questions you and I talked about. We can go over and some stuff and just kind of maybe demystify some of this for people, because I know there's terms out there, Sears and milestone and all these different things. And a lot of people just are wondering, hey, why did my HOA go from $300 a month to $750 to, in some cases, well over $1,000, as we talk about. So we'll talk about that. But I guess why don't you just, I kind of did an introduction, but kind of give everyone a little bit your background a little bit, if you wouldn't mind, and
sure,
we'll get into it.
Yeah, and I'll give credit where it's due. My wife was actually the one that saw your video, and she's like, "Hey, check this out. This is right up your alley." So yeah, I reached out and said, "Hey, if I can ever be a part of what you do," because I think educating the communities is a big part of what I do. Whether it's educating property managers, educating board members, homeowners, it's a never-ending battle. Because when you really think about what you're being asked to do in a community association, especially as a board member, you're in essence being asked to be a volunteer and to run a Florida corporation. These communities are legal corporations in the state of Florida. You can go to Sunbiz and you can look up the association and you can see the board of directors, and you're listed right there. You're running this operation and you're doing it as a volunteer. You may have never had experience in it in the past, or maybe you have, or maybe your experience was out of state somewhere up north. Things in Florida, we joke that in the insurance industry, it's not the state of Florida, it's like the country of Florida when it comes to how different it is. So I really enjoy the education piece. I've joked that if I could actually make a decent living just educating on this, I would, but unfortunately I can't. So find a way to do it along the way with the clients and the managers, the board members that I'm involved with. And I'll put a quick plug into CAI, Community Association Institute. It's a nonprofit organization. It's a national organization with local chapters. If you're in a community association, I would encourage you just to Google and look up CAI, Community Association Institute. There's going to be a local chapter. There's 8 or 9 in Florida. You're going to have one somewhere close to you, and their goal is to educate homeowners, property managers, vendors, board members, to really educate the community for community association.
Very good. I'm looking at
I
a couple.
highly encourage you to look them and see what it would take to become a member, attend one of their events.
And what we'll do is we'll make sure to get that. You'll share that with me. So this is being recorded live for everyone. So if there's anything you missed, then go back, and we'll do, Doug, is I'll put a link for that.
Yeah.
Actually put it in the about section, so you guys can go click there. And just quick hi. Hello, Pamela. Thank you for leaving a comment. Good evening from Clearwater, Florida. Fred Cross. And Pamela moved from Gilchrist County to Gilchrist County from Boynton Beach. Is Gilchrist one of the counties over on the West Coast?
It might be. It doesn't sound familiar to me, though. I mean, most of the counties do in the state, but I apologize for not.
That's all right. Well, Pamela, thank you guys for watching. And guys, you can ask some questions here. I want to keep a little bit in control with not a bunch of questions. So I got some questions that Doug and I were going to kind of go over. But, if you have something and we can answer it, we will. So, but, well, Doug, thanks. I appreciate it. And thank your wife for watching my video. And yeah, I started to see it in all the, when we go look for properties and we look in the MLS, you see assessment. And even as recent as I've been out showing a buyer who's looking for a condo for her mom, and we saw almost everything we looked at had some form of type of assessment. They weren't bad, but a lot of the sellers were paying them because they kind of like, well, if we don't pay it, is someone going to buy my unit? Some weren't. Some were like, hey, this is what you'll take over. It all depends on the building and what it is. That's real estate's always negotiating. But a lot of them were just like, hey, let's just pay it off and get out of here. But I guess the question is, where are they moving to from there? But don't know.
Yeah, absolutely.
So all right. Well, so you gave me some questions, and I'm just going to we'll go off those questions. I think it's a nice way to keep it going on track here. So the question one was, why has property insurance gotten so expensive in Florida over the past few years?
Yeah, I mean, it definitely has, unless you're living under a rock, you've seen the price of your personal insurance go up. If you just even have a single family home, auto insurance, and we're seeing that, of course, with the cost of goods and everything else. But insurance specifically in Florida, I mean, there's several kind of major reasons why. You have to look at one thing. So since 2017, we've had active storms every year, multiple storms every year since 2017. And so those storms have impacted, pricing because of the claims. You may never have experienced a claim at your association, but I promise you someone in your area has. And the insurance companies are paying those claims. So the active storm season has massively impacted pricing of insurance in Florida. One of the other things is some people don't even know this, but insurance companies actually buy insurance. It's called reinsurance. So the insurance companies buy insurance in case their losses get to a certain point, they can file a claim on their own insurance. And reinsurance companies essentially are made up of investment firms, right? They're capital groups looking to invest money. And so when they go to do that, and reinsurance companies have had a real pullback in investors because of the interest rate environment. So less people are investing in insurance or investing in other things, and that's going to drive the cost of reinsurance up, which drives the cost of insurance up. And then probably the last major factor has to do with litigation. We're seeing some of the craziest, settlements and litigations. People are having these, they call them nuclear verdicts. We're seeing claims on the property casualty side, homeowners suing the boards, suing the association. I mean, I've got associations right now going through all kinds of litigation for one thing or another, whether it's, again, homeowners claiming the board members are stalking them because they're not abiding by the rules, and one thing and another. It's just it goes crazy. And so, I've got a big high rise in Clearwater that they're flushing baby wipes down the drain. It's clogging the toilets and it's flooding units, and everyone's wanting to blame the association. And it's just one thing after another. So these claims continue to drive the cost of insurance up, and the litigation, the actual judgments are so expensive that they're finding for. So there's really those three factors, storm seasons. And what that's done is that's caused a lot of insurance carriers to pull out of the state. So now you have less insurance companies, right? And that's just going to be a simple supply and demand. That's going to impact that pricing as well.
Wow. Yeah. First of all, we know anyone that's on a board, it can be, some people are good, some aren't good. We've seen what's happened with some of them, but like I said, a lot of those people volunteer, and not all of them are evil. And I know a lot of my viewers are probably like, I've had a video, people told me how they feel about HOAs, and I live in an HOA and I get it. Look, some of them are boneheads and whatever, and power tripping. And then others are just people trying to help make their community better as they want to keep their property values up. And so it's a thankless job to some of them, and even the ones that are trying to do right. So
Right.
yeah, I can imagine how it is. And that's important. You brought that up, that, when people are buying a condo in Florida, one of the documents we have that says, are there any assessments? One of the condo writers, it also says, I have a right to review all the condo docs. And also it asks that important question, are there any pending lawsuits?
Right.
Which is always important, because not only do you not want to get involved in that, but even if you're cash, but especially financing, the lender doesn't want to see that at all. The
That's
risk
right.
of, it could be a big lawsuit. So, and no, folks, I'm not a lawyer. I'm just telling you about the document. So,
Yeah,
by the
no
way,
unlicensed practice of law here from either of us. We're just
no law, just real estate and insurance. And hi,
me
Alfie.
neither.
Hi, Alfie. Appreciate you coming on. And Gloria, thank you for watching from beautiful Largo. Love the Keys. I need to get down there. So thank you guys for popping on. All right.
I will. Let me make one other comment about the board. And again, you're right. There's good and bad in everything in life, right? So you just got to chalk it up to that. But I will say that most of the board members I work with do want to do the best for their community. They're trying their hardest, and they're just being bombarded from the owners, just complaining after complaining. And remember, these are volunteer board members who make no compensation. And, and I don't know why many of them don't just say, well, then here, Bill, Susie, whoever, you do it, because we're trying our best here, and we just getting beaten up as we walk around our community trying to walk our dog. People are hunting us down, and it's a very thankless job, and it's tough. And then when people sue the association, all they're doing is kind of suing themselves, because then their assessments go up, and now everyone's assessments goes up because of the lawsuit. So it's a tough situation. And again, I know there's good and bad, but it's a challenge.
No, definitely not an easy one to go into. So, well, I appreciate that.
Yeah.
So this is going to be funny, because I just got a question, and it goes with question number 2. What are some of the horror stories you have seen with condos you insure? Funny enough, we got someone that just asked a question, Doug. Someone had asked a question here that said, hi, I have a condo in Largo, and the complex has been sued by someone who was hit by a car while riding a bike and then later died of old age and natural causes, and family won't drop the case. Well, first, we're not going to answer anything legal. Right. We're not lawyers, but Garrett, that's interesting. But back to the question you said that we had, I'm sorry, which is, what are some of the horror stories you've seen with condos you insure?
Yeah, I mean, we've seen it all. Through COVID, it got almost comical. We had boards being sued for not opening up the fitness center, and right next door was another board being sued because they did open the fitness center. Like COVID made people kind of go crazy in a lot of ways. So we saw all kinds of litigation around those type of things during COVID. But outside of that, we're seeing, not just with claims, we're seeing pricing going up. I mean, I've had some associations that have gotten renewal pricing, over 1,000% increase. We were fortunate enough to move them somewhere else, but we saw that initial renewal from the existing carrier. We're also seeing large condos, and older ones are sometimes having trouble getting their total insured value. And if you're in a condo that's governed by statute 718-111, again, not a lawyer, but I can read the statute. The statute says that you have to insure to value. You don't have a choice. You have to get a replacement cost appraisal every 36 months, and you have to insure to that value. And so, they're finding it tough, even though they're trying to. We're finding it hard as insurance agents on these large, multi-story, older buildings. We're having trouble getting full limits. The bill totally valued at a replacement cost of $30 million. And we're only able to get 10 or 15 or 20 million, or maybe it's a super big place, valued at 150, 200 million, and we can't get all the limits. So they're being forced to buy less than full limits. And in good faith, they've done everything they can to comply with the statute, but but it's tough. So we are seeing all kinds of horror stories when it comes to cost of insurance, fully insuring, what the deductibles look like. And on the side of claims, yeah, to Garrett's comment, I had an association. Again, someone tripped and fell on a sidewalk out in front of a retail space that wasn't even legally on association property, but they named everybody in a lawsuit. The condo, the retail shop, they're naming everybody because they tripped over a piece of raised sidewalk. So you name it, we see it from a claims perspective, and it makes it tough because in Florida, you're going to have to respond to that litigation if it comes to you. Again, I don't know if this is 100% true, but I believe you have 20 days or something like that to respond to a lawsuit in Florida. So the association is going to incur some kind of attorney's fees at least, or file a claim on their insurance policy. So there are a lot of horror stories right now when it comes to insurance premiums, coverage, deductibles, and of course onto claims as well.
Yeah, I imagine so. I mean, it is just it's in the news every day. We see it, the news, everyone's talking about it. So, and the point we're trying to do here, folks, is maybe not make you feel better, but just educate you so you know what's going on, kind of see the perspective from his side of it, and just education, and hopefully, obviously, I think everybody wants to get it back to more of a normal, I mean, some kind of normal where the insurance is affordable for more people and the prices, whether it's going to happen or not. But obviously it's a big concern with people that are shopping for homes and are buying condos, and they think, well, can I afford this? And they have to get that quote and stuff. So there's no real answer for it right now. I guess only time will tell. We'll see what happens. But
yeah, that's right. We're seeing pricing. I mean, the last 2 years, I would say the average in Florida for condo associations, the average increase that we're seeing across our book of business has been about 40%, has been like the average. And that's happened the last 2 years in a row. We are seeing some signs of good things, though, in that respect. We're seeing more renewals coming in with lower increases, flat deductibles. Actually, today got to deliver my first reduction in premium in 2 years.
Wow.
To a condo association. Yeah. So those are signs of good things,
A good deal. Well, that's awesome. That's what everyone's hoping to hear. So,
yeah.
All right. Let me see. I don't have any other questions. I had a couple people said hello. So let's go to question 3. Other than simply prices going up, which they have, what else, except for that premium you just were able to deliver, what else are you seeing as it relates to condo insurance and coverages? I know, and I know one of the questions might not be in here, but I do want to ask you about when I mentioned in the beginning of this video, I talked about the Hometown Heroes program, or not the Hometown Heroes, but the My Safe Florida. I wanted to mention that. I know that they just did a test program for condo buildings where they can also apply, and I think it gives them up to $175,000 if they qualify or something. Do you know much about that? And
I don't. I'll need to research some more on that. So yeah, I'm not familiar with it from the association standpoint.
It was, I think what it was the My Safe Florida program allows homeowners to harden their house, right? Maybe if they qualify and they get the grant, they can use it towards a roof or impact windows or door. So they approved a certain amount of money for condo associations, but again, it's a whole thing, and they have to get people to vote and agree on it and all that. And but I guess if they were to get it, then it would give them a little bit of money for maybe a roof or something that they were trying to get. But I was just curious. But okay, so but back to question, what else have you been seeing other than the prices going up with some of the things going on with condos?
Well, kind of related to mortgages. Again, I'm not a lender, but I know that I hear from lenders that, from a deductible at an association standpoint, Freddie Mac and Fannie Mae don't want any more than 10% hurricane deductible. And we were seeing some clients getting 15% deductibles, 20% deductibles. So the higher deductible and the higher premium, all together. And that has been impacting how some people can sell their unit. If they can't get I don't know the numbers, but I know a large percentage of loans, are going to have Freddie Mac, Fannie Mae involvement, to some degree. And if they do, that could impede that process or stop it altogether. So we're seeing deductibles go up percentage-wise on the wind deductible side. We're seeing the all other perils, which is more of like your fire and water loss deductibles. Those are going up. Also, not to dig into the weeds too much, but if you live in a condo complex, let's say it has 10 buildings, and each building is valued at $1 million replacement cost. Your hurricane deductible normally would be a percentage of the building's value. So 5%, 3%, 10%, whatever, but it's of that building's value. So if only one building gets damaged, it's only 10% of the one building's value. What we're seeing on some policies now is the carriers are switching it from a per building deductible to what they call a per location deductible. So if you have 10 $1 million buildings, now you have $10 million. Well, it's 10% of $10 million, even if only one building gets damaged.
Wow.
So they call that a per location deductible instead of a per building deductible. And when you look quickly at your declaration page, you go, oh, well, we had 5% last year, 5% this year. It looks the same. It may not be if you don't know how to read the details and have an agent that's really able to point those things out to you. So we're seeing deductible changes, the type of coverage and deductibles changing. And I would say the other thing I'll say on this is that roof age is kind of king right now. And what some carriers are doing is they're saying, well, we normally offer replacement cost coverage on your building, meaning there's no depreciation. We're going to insure it to value. We'll replace it to value minus the deductible. But if you have a roof over 12 years old, there's some carriers that are now saying, well, we'll insure the building portion, not the roof, but the building portion at replacement cost. But the roof covering is going to be insured at a depreciated actual cash value. And depending on how old that roof is, your depreciation schedule may drive it to zero, and you may have no coverage on your roof.
Wow. And that's happening now?
That's been happening for the last year, and it's still happening. Some carriers, it's 12, 15 years. Some it's 12 years. But a lot of carriers are implementing what they call an actual cash value roof endorsement on the policy. And if that roof gets over 12 or 15 years old, you don't have the coverage you think you have. So that's a big, big deal.
Wow. I think your phone might be ringing quite a bit.
Yeah.
Hope you guys give him a call. Don't drive him crazy, but he might be able to help you out. So interesting. All right. So we don't have, all right. So just seeing pop over here. Everyone's leaving some comments. That's okay. So let's go on to question 4 then. And that is that you've reviewed thousands of insurance policies and programs over the years. I'm sure, right? What are some of the most common mistakes or problems you see?
Yeah, so let's shift away from property insurance for a minute. I mean, that's our big conversation because that's the most expensive. But if you're in a condo association, chances are your association has coverage for property. That's the exterior of the building all the way into the unfinished drywall. If you're in a flood zone, you're then going to have a flood policy potentially, which, by the way, covers not only into the unfinished drywall, but also covers into cabinets, countertops, flooring, and fixtures. The wind policy doesn't. I'm really going deep in the weeds really quick here, but you're going to have a hazard or a wind policy. You're going to have a flood policy potentially. You're going to then have general liability. You're probably going to have a directors and officers, a crime bond. You might have an umbrella. You might have an if any workers' comp policy, cyber, various other policies. But property is always the most expensive policy that you carry, and then maybe your flood. But some of the other policies are really important. If you're serving on a board, the directors and officers policies protects you as a board member, and it's a huge policy. We find mistakes on those policies. Florida law, whether you're in a condo or an HOA, it requires the association to carry a crime bond. What that means is that the board is given the authority to manage the funds of the entire association. What if the board absconds with funds? How does the association get reimbursed? Well, Florida law requires the condo to carry a crime bond that would reimburse the association. And it says right in the law that the crime bond has to meet or exceed the amount of funds that the association controls, total funds, reserve, operating, investments, anything. Any and every penny that they have has to be insured to value. And I can't tell you how many associations will send me their balance sheet. They got $1 million in the bank and they have a $25,000 crime bond. And they're violating Florida statute and they don't even know it because their insurance agent isn't a condo specialist. And they're just going, oh, you need a crime bond? Sure, here's one. They don't even know why they're writing it or what the limit should be. It should be different for every association. How much money do you have? That's how much the crime bond is for. That's I would say the number one mistake I find in condo policies. I would say 9 out of 10.
And is that bond supposed to be, if I understand you correctly, is that the bond supposed to cover if you have someone that's like embezzling the money or doing something?
That's
kind of
right.
like what happened down in Miami with that
That's
really large
right.
one? Okay,
That's
it's like
exactly
$2 million
right.
of money being funneled out. And Okay.
Yeah. So that crime bond, that's why it should be the amount of money that you have in the bank, because that's how much a board member in theory could steal, or anyone who has access to those funds, a property manager or whatever the case might be.
They
And
milk
some
that.
people will say, well, we have a management company. We can't even touch, our board can't even write a check without the management company's approval. Well, that may be true, but the board could fire the management company tomorrow, take back over control of the checking account. So that's why Florida law says you have to have it. And that's even if you're in an HOA as well, you have to have that. That's probably the biggest mistake I see. And then the second one I'll mention is that
That's
if you
a big
do,
one, though,
it's
I
a
can
huge
see.
one. Well, and it's not a big premium one, and that's why people overlook that policy. It's a very inexpensive policy. But I can't tell you how many times I've had to look at a board and say you're in violation of Florida statute right now. You know that, right? Like, I mean, I know you maybe didn't mean to, but you're breaking the law as we sit here right now. So,
You warned them.
Nobody wants to hear that.
No, they don't. Wow. Well, that's definitely, that's interesting. And it's neat because a lot of this, listening to you talk, I'm absorbing some of this because a lot of this, folks, I'm not an insurance expert. I'm never going to talk to you about insurance. I point you to an insurance person. So I appreciate I'm learning from you as well. So hopefully the audience is as well. They're getting some good information. All right. So we're going to get into where everyone's been watching the news. And the next question is the one that a lot of people know about after the collapse and all that. So we know there have been several changes to the law that are impacting community associations. And this one had me a little confused. Even when I made the video, and I told you before this interview that I went and I tried to research information and try to share with the general public what I know and stuff. But even some of it reading online is a little confusing about what's what, unless you're the lawyer that wrote it, right? So can you tell us what you're seeing as it relates to Sears, which is the Structural Integrity Reserve Study, right?
Yeah.
The milestone inspection, and then the standard reserve requirements, which I think has been in place forever with condos. And then I guess, you kind of touched a little bit, but appraisals.
Yeah. Well, yeah. So, I mean, again, not an attorney, also not a licensed appraiser or licensed to do reserve studies. But again, I deal with them every day. I also did provide to you, Paul, I believe you're going to make it available at some point if people want to reach out to us, a really great document that a friend and a colleague of mine put together. Patricia Stabler is her name. She has an appraisal company called Stabler Appraisals. She did an amazing job and an amazing service to our greater community of community associations and condos. She put together a wonderful document that kind of talks about, I'm looking off to the side because I'm looking at it, a wonderful document that can give us a lot of great information. Of course, any of that information can change if the laws change. It's only current until it's not. But I'll work maybe backwards through that list. So if you're in a condo association, you've been required for years. Statute 718, subsection 111 has required you to have a reconstruction cost appraisal every 36 months. I know a lot of associations get them every year. And this is not a retail market value appraisal. It's not what the units will sell for. It has nothing to do with that. I like to say it's bricks and sticks and labor, right? Bricks and sticks and labor. It's just what would it cost to rebuild your building in today's dollars, regardless of how old it is. That's the reconstruction cost appraisal. You have to have it every 36 months, and that's how the building should be insured to that value. So that one's pretty cut and dry, but again, surprised how many condos I come across that, we did one of those about 10 years ago, maybe. I don't know, can't remember, and again, violating Florida statute by not having it done. And more importantly, you're not insured to value. If the building blew down, you're not going to get enough money to rebuild it or recuperate the owners.
It's why lenders will always ask, but they want to see the insurance policy and make sure everything's not only observed, so they want to know how strong their insurance policy is. And that's every time you get a lender, they like the long form, the short form. And I know I'm throwing out terms that people may or may not know, but when you're trying to finance a condo, it's not easy. And then the requirements have gotten more and more strict, where they want 25, even if it's not your primary residence, as much as 30-35% down sometimes, if you're financing it. So okay. Not to interrupt you. So milestone inspections.
Yeah. Well, let's go to standard reserve requirements. So just historically, condos were required by law to reserve for certain things that could be replaced regardless of how many stories. Just all condo associations had some kind of reserve requirements, but the law used to allow you to waive those requirements. If a vote of the membership, you could partially or fully waive your reserves. And I think the thought process is okay, I'm a condo owner. I'm going to pay into these assessments. If I sell my unit, I'm not getting that money back. and that's going to be for down the road when they replace the roof. So let's not do that. Let's just not save any money. And then when it comes time to do it, we'll just special assess everybody who happens to live here at the time, and then we'll get it done. And that's the way.
Kick the can.
That's right. Kick the can. And associations have been doing that for years.
And the can stopped, and now people are very upset.
That's right. And now the state has said, sorry, you can't kick the can down the road any further, regardless of if you're 3 stories or more. If you're a condo association, you got to reserve for certain items, and you don't have a choice. You got to put the money in a reserve.
That's a big one.
It is.
I just saw a report that was said that one of the HOAs in Miami, I think the condos, their assessment was like $110,000 per member. I was like, that's just insane.
Yeah.
But if they ignored it for all those years and didn't do I don't know the details of it, but just that's a huge assessment.
It is a huge one. And we're seeing that and obviously variations of that all across the state, because now they have to get, I believe it is before January 1st of 2025 is when they have to have the plan in place. They don't have to have all the money in the bank, but they have to have had a reserve study. They have to know what it's going to take, and they have to set the budget to fund it by the date that the reserve study says it's going to have to be replaced. So that's jacking everyone's assessments up on top of insurance and everything else that's going into it.
Yeah. And I know the new forms that came out when you're buying a condo, one of the new forms that we have, it talks about it, on that condo writers that we have to, hey, are there any assessments? What are the reserves? Is there, again, the pending lawsuits, all those, and is there any major repair that's being come up? Now they have to tell any of the owners, the renters, and potential buyers. They have a right to know that. So before they put their offer in, like, hey, is this building about to get a huge assessment? And of course, we always, I always tell my buyers, let's ask for the minutes, go back at least 6 months if we can, or at least go back a month, but if however much they'll give us, but look at the minutes of the last meeting to see, is there anything possibly coming up that hasn't been voted on, but could be getting voted on and stuff. So look at some stuff. So, okay. Do you want to go to Milestone?
Yeah, let's go to Milestone. So Milestone, so that's new, right? That's one of those new things that came out. If your association's 30 years old or older, you have to get the Milestone inspection. It's kind of called a phase 1. If it passes it, then you're fine and you move on. And if it doesn't pass it, well, then you have to have a phase 2 inspection done that's really going to dive deep into what needs to be done. And then you have to begin to get that remediation work done on whatever the structural issues might be, and begin to work towards that process of getting it fixed. So just the cost of the Milestone inspection, getting it scheduled with an engineer, you have to call an engineering firm, get the inspection scheduled. We have thousands of condos in Florida. So these engineering firms, and the Milestone inspection didn't exist before. It's a new compilation of existing things that they would go inspect, but it's been put together as a new item. So now these engineering firms are having to figure out, what are we going to look at? What are we going to say when what's the form going to look like? And then they have to schedule it. So they're booked up. So you have to have that Milestone inspection done if you're 30 years or older. And then the last one is that Sears, which is essentially a reserve study specifically for 3 stories or more, right? It kind of takes on top of the normal stuff that a reserve study would look at. It looks at other things that apply specifically to 3 stories and more.
This question's come up a lot, and I just clarify. So the 3 stories or more, is there a distance from the ocean that takes place, or is it any 3-story or higher condo anywhere in the state of Florida?
You know what? That's a great question. And
when I first did the video, I could have sworn I read that it said within so many miles of the ocean, but maybe I was getting some of that mixed up. And
yeah, so let me read right here out of that document. No, it's okay. So I'm going to read out of this document. It says, after the collapse of the Champlain Towers in Surfside, Florida, legislature passed SB 4D and the glitch bill SB 154 to avoid future collapses. Florida is dealing with many aging buildings and many of them lacking adequate upkeep due to insufficient reserve funds. The law applies to all buildings with 3 or more stories. Associations can no longer waive reserves for certain items recognized in the law and will be forced to have a Sears every 10 years. As the law currently reads, every association must have a Sears in place by the end of 2024 in preparation for fiscal year 2025. Like any other reserve study, a Sears consists of a visual observation of all components and a financial analysis of over a 30-year period. The visual observation must be performed by an engineer, architect, or a designated reserve specialist. And then there's a list of what items are on the thing, but very clearly it doesn't say anything about distance to coast.
So it could be any condo in the state of Florida that's 3 or taller.
Yep, 3, and again, 3 stories or more. Some people are like, well, we have a parking garage, and then we only have 2 stories above that. That's 3 stories. Gotcha. Right? Parking garage is story 1. Living, that makes 3 stories. So
interesting. Wow.
Yeah, it doesn't matter if it's living or parking. It's still 3 stories or more.
Carl said, oh, no, go ahead.
Yeah, you have all these items now that they have to reserve for, like we just talked about, right? And they can't waive the reserving. So it's a challenge.
No, yeah. It's going to add up. Someone wanted to just let us know a little bit of humor. I like Del Boca Vista. Frank Costanza's HOA president. Little Seinfeld reference there. What do you mean? There's no more Boca del Vista? Thanks, Carl. Appreciate that.
I love it. Carl.
So, all right. So, and then I guess, let me see.
Someone did have a question. I don't know if you wanted us to look at it. It looks like it was from Garrett as well about the irrigation.
I wasn't too sure. I know
I can try to answer it the best I can just because he's asking it.
I know we don't want to give any legal advice, guys. We're not attorneys here. It's just
I guess my thought on it would be, do the bylaws say that you have to provide irrigation? Like it's going to all go back to what the bylaws state, and so if the developer removed the well, sold the house that was on top of it, 4 years ago. So if there's no well, how are they supposed to irrigate? Or, I think it comes down to questions of practicality. And then again, do the bylaws say, the HOA must irrigate all common grounds, blah, 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 blah. And if it does, then it needs to be addressed, I guess. And again, you can talk to the attorney about it. But I would say that it really is all going to fall back to those governing documents. Does it say they have to? If it doesn't say they have to, then it's a matter of the board saying, hey, the documents don't say we have to, but it'd be probably a good idea to irrigate this common area. Now, does everyone want to pay? Does everyone want to increase the dues so that we can put in an irrigation system and water it? Well, no, we don't want to do that, so, which one is it, So it's, if the bylaws don't state it, then do you even want to do it?
We'll put in a rock garden. We'll be happy.
There you go.
So, all right, Garrett, thanks for that. Doug, did we address standard reserve requirement? You did, right? Yeah, you went over that.
Yeah, so we kind of went over 4 of those items.
All right. All right. So let's see. We get down here to question 6, and thank everyone for their comments, and I thank all you for staying and watching. We appreciate you guys watching. It's a good group of people watching us tonight. And if you guys like these, be sure to leave a comment, let me know, because I'll be bringing more guests back. It's nice when I can get someone like Doug to share their wealth of knowledge and help you guys answer those questions as we go through the real estate market that we're doing. It's always changing, and it's always time to learn, right? I'm learning from him as he speaks. So, all right, Doug. So, what should board members and community members know about how different the process for buying insurance is for the community association compared to purchasing their own personal insurance, so their interior policy?
Yeah, I mean, it couldn't hardly be more different. I think that people have a reference point, right? The reference point is, oh, I've bought insurance before. I have auto insurance, or I had insurance on my single family home up north, and now I'm buying a condo in Florida, or I bought my own condo insurance. Comparing that to what the board goes through purchasing commercial insurance. Remember, your condo association is a legal Florida corporation. Yes, it's a residential facility, but it's a business. It's a corporation. And so you're buying commercial insurance. You're not buying individual personal insurance. This is a commercial policy that you're purchasing, or multiple policies. So one, understanding that it's way different. The underwriting process, you can't go on your smartphone and buy some condo insurance for the master policy and spend $700,000 with Geico, and I'm going to insure my whole condo building. Let's get a quote in 15 minutes. It doesn't exist like that. I mean, as agents, we have to submit detailed applications. Underwriters take weeks and weeks and weeks to underwrite these, come back with pricing. The process is just much more detailed, takes a long time. It's a lot more still human driven, a lot of still paperwork and manual entry of data on the carrier side. So just understand that your association's probably not going to get their pricing back from their agent till about 30 days out from the renewal at best, at very best. because we as agents, we're not getting the quotes back sometimes until 30 days or even closer to the renewal. So the timing of that needs to be understood. It's a challenge. We get it. And the other thing, and this is going to be really confusing to some folks, it doesn't make sense, doesn't sound like the good old American way, but for the most part in commercial insurance, insurance companies will only talk to one insurance agent on behalf of your association. So when you say to your board, hey, go out and shop our insurance, get us some better prices, call a bunch of agents and shop it, get it down. It doesn't really work that way. They have to call an insurance agent or their existing insurance agent. That agent's considered the agent of record. And insurance companies will only typically talk to the agent of record. So if the board calls another agent and that agent calls the same insurance company, they're going to say, sorry, we can't talk to you. We already have an agent of record. So the way I describe it to boards is like this. Imagine this. Imagine if you could not call 3 landscapers to get bids, but you had to call a landscape broker. And the landscape broker, they would go out to all the landscapers in your area, come back with bids, and they would present those bids to your board, and then your board would decide which landscaper to go with. The landscape broker doesn't charge a fee. The actual landscapers share a little bit of their profits with them. That's how they make their money. And but you can't call landscapers. You can't. Their numbers aren't published. You can't call them. You got to call a landscape broker. The broker gets you quotes. That's how it is in commercial insurance.
Wow, that's very good.
You can't. A board member can't call Hartford, Chubb, Lloyd's of London, American Coast. They can't call them. They won't take your call. You have to go to a broker or an agent, and the agent then goes out on your behalf and gets the bids for you. So it's a completely different process. It's really foreign to most people, but would happy to deep dive into that with some people at a later point, but it's just something you need to kind of wrap your head around. The purchasing process is way different.
So as opposed to obviously what we find the interior policy, which they can call up the guy who networks with me and says, hey, I need to get a policy for my interior on this condo.
That's right.
Okay.
That's right. And you could go to 3 different progressive agents in town and they could all give you a progressive quote. I mean, you could go to an independent agent. You could go to a captive agent like a State Farm or a Farm Bureau or a Farmers. Those are captive agents. You could go to an independent broker who can shop with other companies. You've got all kinds of stuff, but with commercial insurance, it's just a completely different process.
Carl said, just for reference for you, he said, I'm in Canada. I believe your HOA is the same as our strata council. Not sure though. Have you talked to many Canadians, Doug?
I haven't heard of that. I mean, I do have some Canadians on boards that I work with, but I've never had them mention a strata council. But it might be, yeah, for sure.
Gotcha. Just curious.
First, the HOA
right.
is the homeowners association. Yeah.
Okay. Let me see. We're almost we're at our last question. And the last question we have for you is, if someone is living in a condo, what insurance do they need compared to the insurance carried by the association? So kind of riding on what you just talked about.
Okay. Yeah, you froze up on us a little bit there.
Oh, am I freezing up on you? Oh, no.
You froze up on me, at least, for just, you said compared to the carried by the association.
So if someone's living in a condo, what insurance do they need? Kind of similar. You sort of addressed it, but maybe a little bit more into the tier. If someone is living in a condo, what insurance do they need compared to the insurance carried by the association? So we already kind of talked about the association and what they do, and they go through that whole process. But you're buying your condo and you and your wife want to get, hey, I got to get insurance on this. What do they have to do?
So they're going to typically have at least an HO6 policy, which is a condo unit owner's policy. That's going to be, if this is, if they're buying an investment property and they got a bunch of investment properties, it might be different. But if you're buying this as a seasonal home or maybe your primary residence, you're going to buy an HO6, a homeowner 6 policy in Florida. It's going to be a condo unit owner's policy. What it's going to cover is a couple things. It's going to cover the interior of the unit, from the finishing of the drywall and the finishing of the flooring and the ceiling, all the way in, including cabinets, countertops, light fixtures, plumbing fixtures. It's going to cover all of that. The association covers into the unfinished drywall and the unfinished flooring. So your HO6 is going to have that. And then it's also going to have some liability on it. So if Paul and I visit your house, you come in your condo, we trip and fall over your rug and we want to sue you and we want to hire an attorney, you might file a claim on your liability policy that's attached to your HO6. It maybe has 100,000, 300,000 of liability, whatever it might be. and maybe you have some wealth, and so you buy an umbrella policy to augment that liability. But you're typically going to have an HO6 policy. And then if you're in a flood-prone zone, you might have a flood policy. And that flood policy for a unit owner, your association, if they purchase flood, already covers everything you could cover except for your personal effects. So if you're buying a flood policy and your association already has flood policies, all you're going to insure is like your electronics, your couch, your clothing, whatever, just contents. Your association already insures all the way into the drywall, the flooring, the cabinets, the countertops. And that's where this discussion gets confusing, because you might say, well, wait, I thought you just said the HO6 covers the countertops and the cabinets, but now you're telling me flood, which one is it? They're two separate conversations.
Okay.
So flood insurance covers in more to the inside of the unit than does the other policy. So yeah, if that makes sense.
Well, and the one about that had me, so you have to get, you say that they have flood insurance could be covered from the master association. I'm buying a condo on the 30th floor.
That's right.
Flood, let's define flood. Are we talking rising ocean water? Are we talking about, we're not talking about, because wind-driven rain is a different, like if the window blows out, that's not considered flood, right?
That's right. Water from a leaky pipe, water from rain blowing in the window, those are not flood.
Flood is what we experienced on the West Coast.
That's right.
Myers.
That's
flood.
Right. Rising water from any natural source.
So if you're on the 30th floor, you still have to have a flood policy?
Well, the associations, if you're in a high-risk flood zone, the association is going to, chances are going to buy a flood policy to protect the entire building, mainly not because of rising water on the 30th floor, but what about the storm surge at the base of the building?
Gotcha. Okay.
Now the whole building's integrity is brought into question. So they're going to ensure the structure that way. You may say as a unit owner, I'm on the 30th floor. My clothes aren't going to flood. My electronics aren't going to flood from rising water. So I'm not going to carry a personal flood policy at all. And the association may choose not to, but the problem is that if there's a lender involved and they're in a high-risk flood zone, they're not going to be able to finance a unit without a flood policy. Not the unit owner policy, the association policy.
Association policy.
Yeah. So, and I have a couple documents that if folks want to reach out, I know my email's there on the screen. I'd be happy to send you, because this can be a very confusing conversation and we get to ask these questions a lot. Board members get asked these questions a lot. What does the association insure and what do I need to insure? We've created a couple documents that answer all those questions. And I'll leave this question with this. There are two discussions. Is it an insurable event or is it a maintenance issue? Because you may be required to replace your windows if they get old, but the association's required to insure them if they blow out. So there's a difference between maintenance and insurance.
Yeah, that was, I remember I talked about in the video and I wasn't too sure because I thought, well, the building covers the windows, but a lot of times it's the homeowners that are responsible.
Yeah, so you have an insurable event versus just a maintenance wear and tear.
Okay.
Yeah, your documents might say you replace your AC when it gets old. But if it's on the roof of the building and a hurricane blows the ACs off, they're covered on the insurance policy for the association.
This happens quite a bit in condos. And I probably think I have the answer to it or think I know it. But so HO6, so the guy upstairs leaves his bathtub running. And this happened. I'm asking this happened to a property I had at one time. So comes down, I guess they know where it came from. Someone's going to find out. So you go after his policy to cover for the flood in your house.
Well, you're not going to like the answer to this, but neither are the listeners. But Florida condo law is pretty clear. Regardless of where that cause of loss came from, the unit owner that gets damaged is responsible for their unit. Now,
if you don't have an HO6, which some don't.
Yeah, if you don't have an HO6, you're on your own. You're self-insuring. If you have an HO6, you can file a claim. If you or your insurance company feel like someone else is with litigation, you could say, well, but I know my neighbor upstairs, he put a big kiddie pool in the living room, filled it with water, and they had a party and it busted, and that's what leaked into my house on the first floor. Okay, now you've got a different scenario. You're still responsible, but you can certainly sue that person, I would assume, for negligence. I would guess you could do that. But if it's just a leaky pipe, it happens, it drains and it ruins your unit. Unless you want to sue that owner upstairs or sue the association, Florida condo statute says it's on you as the unit owner.
So I guess make sure you have that policy covering yourself for those, just like uninsured motorists. Reason why I have that for
That's
same
right.
thing,
That's
right?
right.
I mean, it's just it's unfortunate, but you have it.
That's right.
Well, Doug, this has been enlightening, and man, you're a fantastic guest, by the way. Thank you so much for agreeing to do this. It's
Appreciate it.
a lot of just me listening to you and like, wow, like I know I'll be emailing you during later on at times, being like, hey, Doug, I got a question for you, and hopefully referring you some business. But does anybody? Let me throw it out to the audience. I know we'll just see if there's any quick questions. Do you guys have any? Simple, nothing too in detail right now because we're coming up on an hour. But you're welcome, Gloria. Thank you, and Garrett and Carl. Thank you guys, everyone who's been watching. I appreciate it, and Lisa and all you guys. Thank you so much. But if his email's there, listen. If you want to reach out to him, his email's right there. This will be recorded, and we'll figure a way to get you the information. He has some great information to share. If I can create a link for you guys to get it on the channel, we will. If not, you can probably email Doug. I just don't want him to be overburdened with a bunch of emails, but yeah, we'll get you that information. And I don't see any questions popping up. Doug, this has been great, man. I really appreciate it. We hopefully we'll keep seeing things improve for the state of Florida. I know the weather forecast isn't looking good for us this summer. That is not what any of us want to see, whether we're in a condo or a home or anything. Nobody wants to see that. Hopefully they just all blow out to the ocean and we just get to see the weathermen get out there and spend 2 weeks interrupting our TV shows.
Yeah, that would be wonderful. That would be wonderful.
Hey, the storm's 3 weeks away, but we're interrupting your show, the game. We're interrupting this today to talk to you about the storm because it started. It's like, talk to me when it's an hour away, okay?
That's right.
I'm just kidding. I'm kidding. So, and then,
well, I'll kind of leave everybody with this. If, reaching out to me, more than welcome to reach out. Like I said, I really enjoy educating. If we can help your association, obviously we're going to have to work with one of the board members. Unit owners a lot of times get excited and then, can't do anything. We really need to talk to a board member. And if it's not me, I would say, try to work with an insurance agent that specializes in condos. I mean, they might say, sure, we can do it, and I'll mention the designation that I have after my name, CIRMS, that stands for Community Insurance Risk Management Specialist. It means I have a 2-year master's degree in condo HOA community insurance. That's all I do all day, every day. So if it's not me, find someone who specializes in that, does that all day. That's all they do. You're really going to be in a better place with someone who specializes in this, opposed to someone who says, yeah, I write plumbers on Monday and condos on Tuesday. That's great. And they might do an okay job, but you're going to be better served if you have a specialist. That's for sure.
It always helps. So it's people specialize in fields for a reason, and they usually are a great source to help answer almost all your questions anyway, and help you resolve stuff. So great, Doug, man, you've been great. I appreciate it. Thank you so much for your time, and thank all of you, my audience. Thank you guys. I hope you like this. I like doing live streams. Sometimes it's an easy break for me to not have to get out and shoot a video. Although I did just get a new camera, so I'm excited to get out and start showing you guys my new camera. Is so cool, and be showing you some more fun stuff about what's going on in South Florida. Be sure to go check out the latest video I did about the hurricanes, where the least place is likely to get hit. That was interesting. I did that video, Doug, and it was like looking at it, and I was totally shocked to realize that the part of Florida was up north was hit 66 times compared to other parts of Florida and stuff. So, but
yeah, I saw that video too. I was, maybe not surprised, but yeah, but it seems like it loves to hit that armpit of Florida, boy. Just
yeah,
right there. Yeah.
So go watch video. It's a good video, and watch video before that, folks, because the hurricane season is coming. June 1st is just around the corner, and you want to be prepared. You want to get all your supplies. Stock up, folks. Get your stuff now, because if you've lived here like Doug and I have, and you've been through a storm, the last thing you want to do is wait till the storm's beating down your door to go get any supplies, because it's either going to be gone or it's going to be a nightmare trying to get it, and people's tempers flare. I'm Doug, I'm sure you've seen it. It's just people get ugly when the hurricanes get close and they start panicking. So, just get prepared, be safe, folks. And it's part of living in paradise. We got to deal with it every year. So with that, thank you guys so much for watching. And this will be recorded for anyone you want to share it with. Be sure to reach out to Doug. We'll get that information to you. And I wish everyone a great Wednesday evening.
Wednesday.
The Monday holiday threw me off, right? So great Wednesday evening. Doug, thanks so much for your time. I appreciate it.
Thanks, Paul.
And everyone else, get out and enjoy paradise. We'll talk to you real soon.